Hi, everybody. It is Wednesday, September 10th, 2009. I want to take a look at gold and some of the gold mining companies, gold related stocks, that is. Let's take a look at GLD first. This is the exchange traded fund for gold. It's supposed to roughly approximate 1/10 of an ounce of gold. So, with gold at 1,000, this thing is theoretically supposed to be at 100. You can see that we had just come from $1,000 an ounce this week, and this didn't hit 100, so it's not perfect like all the ETFs, but it is a pretty good vehicle for equities traders to track gold with if you don't want to pay for a feed to the COMEX. Anyways, we can see here that the gold's been getting a lot of attention because it broke this triangle. This is what's known as a symmetrical triangle, and once that triangle is broken, we're supposed to be able to approximate a price objective by taking the height of that pattern and adding it to the breakout point. Some places will tell you that you want to measure from the widest part. I take a little bit more conservative approach and say we want to measure from the point of the first higher low, which would be right here. So with all price objectives, you always want to be as conservative as possible anyway. So what we do is we take the height of this pattern, which is represented by this line, and add it to the breakout point. So added to here, and you can see that that would approximately equal about 110 for the price of the GLD, or a little bit more than 11% higher from here, which would approximate about $1,100 an ounce, obviously, in physical gold itself. So we can also see here that this market has set up that symmetrical triangle over here has also come to form a right shoulder, basically, and really this market probably needs to clear this, to get a clean breakout on the GLD above $100.44. But it does look like it's on its way. You can see that we had some big volume in here as that descending triangle, the descending trend line rather, which defines the upper boundary of that symmetrical triangle, was broken here with some big volume. And the last 2 days we've seen a little bit of selling. It doesn't look like the beginning of a reversal for this, or in other words, a failed breakout. But it is a little bit of profit taking that's come down so far right to the 5-day moving average. And when we have a strong trend, a lot of times a rising 5-day moving average does act as support. So we'll want to see if gold can stabilize in this area near the 97 level. We can also take a look, if we want, at just some Fibonacci of this recent move. If we take a look at really from where it broke out, that's a conservative way to measure it. We can see that it's come down about 38.2%, almost precisely here today. So there's a couple of reasons to think the 97 may offer some support. If not, then we get a little deeper pullback, maybe down towards the 50% or 61.8% retracement. The point is, we don't want to buy on weakness. We want to see this market begin to stabilize before we do buy. Now, if we look at the GDX, this is the gold mining ETF, exchange traded fund. We can see here that this group experienced a vigorous breakout on increased volume over here. It broke past this, really past about the 4175, 42 level, and it had a couple of three real strong up days. 2 days ago, it gapped up, sold off pretty hard, and we had a little bit further profit taking in here today. If we back it up to a weekly time frame, you can see that this has been a previous level of congestion for the gold mining ETF, and it doesn't really mean that that's where we'll encounter further resistance, because a lot of the stocks actually look like, and we'll take a look at some of those, they could be setting up for more upside. If we take a look from the lows here to this recent high, which was the open over there, we're at about a third retracement is in there as well. We're at the rising 5-day moving average, so we might begin to see some stabilization in here, and then the market would begin to trade higher, maybe in the next 2 to 3 days or so. So looking at some of the individual names, of course, we have the big leaders like Agnico Eagle, AEM. You can see here very similar type of charts, obviously, in all of these stocks. And Agnico Eagle broke past some resistance here at 64 basically, and just want to get my regular trend line. If we back it up on the weekly time frame, this is that resistance that was broken. So this market, the Agnico Eagle, over the last most of this year has done it's been grinding higher, but we're really just starting to clear some of the resistance. And if this trend can continue, I wouldn't think that 80 would be out of the question. However, right now the stock is still pulling back. It's similarly at that rising 5-day moving average. Over the last couple days, it has a pattern of lower highs and lower lows. So what we want to do is we want to see this begin to stabilize a little bit, and then we want to see some higher lows develop and higher highs. So that's something to keep an eye on. Not necessarily as a purchase in here, but as maybe this market develops a little bit further correction. It can stabilize and then begin to move higher again. It's encouraging to see in these stocks that today the volume, in AEM was lighter. AUY is Yamana Gold, and on the weekly time frame, Yamana Gold looks like it should be able to at least run up and challenge this area here at about $12 and a half dollars a share, and it's at 10. So this one looks set up pretty good. You can see it broke past this level of resistance right about 10. We're at the point where it looks like it should begin to offer some support in there. Resistance broken, 10 stacked as support. We've got a rising 10, 20, 50, 200-day moving average. So this is one that I like for, that looks like it could go 20% or so. But again, we have short term a correction in here. So we want to let this correction further develop a little bit. If you're a longer term player, maybe you decide to get involved with some call options or something like that. But none of them really look like a buy yet. Subscribers to Alpha Trends have been involved in Coeur d'Alene, and this one has held up a lot better than some of the other ones. We had purchased it on this day right here, and you can see that it's holding up much nicer. It's got a really nice looking longer term time frame, nice cup and handle here on the weekly time frame. So I think this is one of the strongest ones right now. It did begin to pull back a little bit and does have a pattern of lower highs and lower lows. Let's look for this one to stabilize, and maybe there's a play in there as well. Is Ego. This is El Dorado Gold, and you can see it had broken to a new high here in the daily time frame, but quickly came back in. So this one's going to need a little further consolidation, but the weekly and monthly time frames, you can see it's up at all-time highs, or at least since 2003, where this chart is taking us back to. But probably needs to clear 1130, 1140 for it to regain its upward momentum. Another big leading stock is Gold Corp, symbol GG, and you can see the GG has a very similar pattern, that is to the gold mining index itself and to Agnico Eagle. But this one had broken some important resistance here, came back in, but that's just on the weekly time frame. It's coming back in slowly. Today's volume was a little bit heavier. I think there was some news in this one, but it's at a level where it should begin to start to stabilize. It's not a buy yet. You don't want to buy in weakness, because obviously you're just trying to catch a falling knife in here. Instead, we want to see it stabilize and then build a little bit of a base for a day or two, and then begin to move higher once again. But clearly, these are some of the stocks you want to keep an eye on. They're all very liquid. This, IAG traded 5 million shares today. This is called IM Gold, and on the weekly time frame, you can see it's past several years. This move in gold pushed it beyond the $12 level, highs not seen since 2005, and in fact probably at least since 2001, as far back as this chart is taking us. So this one, nice. You see how it broke out on big volume. The volume's diminishing relatively each day as it pulls back. This prior level of resistance, we should begin to see it stabilize, also above that rising 10-day moving average. So the signs aren't there yet for these, but there are stocks that you want to keep an eye on for potential stabilization and then further strength for a possible purchase. Traded 14 million shares today is Kinross Gold, KGC. Real similar on all these. If we look at that 10-minute time frame, still correcting, but we want to start to begin to stock these stocks. You can see here it broke important resistance. I could easily see 25 on this stock if gold continues to remain strong. Newmont, obviously another big name in the group, pulling back to its breakout point here on the daily time frame. On the weekly time frame, looks, this really looks like the gold index, the GDX, Gold Miners Index. But Newmont, I think, same thing. Want to see it stabilize a bit. And one of the smaller ones that I kind of like is Nova Gold. There's a lot of these little ones. I talk about them on Twitter if you follow me there. And also plan on following all of these stocks just mentioned, as well as other ones for subscribers at alphatrends.net. If you don't follow me on Twitter, it's free. Twitter.com, sign up, look under Find People, and search for Alpha Trends. That's all for now. Don't be buying these early, I don't think, but you play them your own the way you want to play them. I like to see them stabilize, then reestablish some upward momentum before getting involved, and that I think ought to come in the next day or day to 3 days.